If you're listening to this, there's a good chance you work within the real estate investing industry. There's another good chance that you would like to increase the sales of your products or services. Well, you're in the right place. United States Real Estate Investor is a platform you need to place your brand directly in front of your target audience. With our focused, growing audience of real estate investing beginners, enthusiasts, and seasoned professionals, you can continually reach our captivated viewers and listeners with ease. To learn more or to get started today, just visit UnitedStatesRealEstateInvestor.com/advertising. That's UnitedStatesRealEstateInvestor.com/advertising. Get ready to increase your brand awareness and your bottom line. Attract clients with content.
Hey, welcome to This Month in Real Estate Investing. This episode will be covering a variety of news items, including is real estate back? And we talk about Opendoor and Redfin in that one. Love affair with stuff, talking about storage, and Florida land buyers scammed. All this and more on this episode of This Month in Real Estate Investing. Let's start the show. All right, this is going to be fun, guys. I'm your host, James Brown, and I help fellow investors reach their passive income goals through our hybrid investing model, as well as other traditional types of investing. So reach out if you want to learn more. If you're watching this live, feel free to comment and ask questions. We'll get them in the chat on the side here and can engage with you guys. So that's what's cool about doing this live. Our guests today are Douglas J. Beck, Adrian Smude, if I'm saying that right, and Noel Christopher. So why don't you guys introduce yourselves in that order with your background and what types of investing you focus on?
Sure. Appreciate the opportunity, James, to be here with you all. And nice to meet you, Adrian and Noel as well. Douglas J. Beck. Let's see. I started back in 2014. Have been predominantly focusing on the wholesale strategy with real estate investments since the beginning. We've done well over a couple hundred wholesale flips in New Jersey and also some in Florida. And also have gone on to do about 50 fix and flip projects across both of those states as well. At our busiest time as a fix and flip investor, our company had about 18 projects going on simultaneously back in 2018, 2019. Since I've gone on into the private money space, have basically worked in a fund. I worked in a fund for a little over a year, then took a step away from that, focused on my coaching and mentorship, what I do. And then recently just took a position with another fund as a managing partner, providing private lending to real estate investors in multiple markets all across the country. So really excited to be here and just participate in the conversation. Looking forward to adding value wherever I can. And again, thank you for the opportunity.
Very cool. That's a good wide background. Go for it, Adrian.
Well, I'm Adrian Smude, and I am from Plant City, Florida. That's in between Tampa and Orlando in Central Florida. And we're the winter strawberry capital of the world. But how I got started in real estate is I was a terrible tenant. Like, you don't rent to 20-year-old Adrian. I have eviction notices for pudding wrestling, spaghetti wrestling, parking a motorcycle in the living room, all fun stories that you don't want your tenants to have. Well, that led me to buy a house. Then I bought a second house, and that second one was a story that was written about in the last recession, where I had the adjustable rate mortgage, losing a little bit every month. Then the value went down, started losing a little bit more every month. Long story short, I gave the home up as a short sale. Fast forward, I bought some more houses, and then I thought we were at the top of the market like 7 years ago. So I've been extremely wrong, but that's what got me into the mobile home space, the single unit with the land. I have since then transitioned all my real estate over to buy and hold, renting, single unit mobile homes with the land. Found success there, love it. Then I started teaching and speaking around the country, wrote a book, and I'm just enjoying life.
Cool.
All right. Well, first off, thanks for having me on the show. I really appreciate it. My name is Noel Christopher. I'm the Chief Real Estate Officer for Evernest. Evernest is a semi-national property management company, whereas we manage 16,000 single-family homes across 34 markets. I actually started in the commercial real estate world in Chicago back in the late 90s and early 2000s. Went through the great financial crisis, lost a lot. It was doing a lot of buying and flipping apartment buildings and things like that. In 2012, I got involved in the single family rental space. I was one of the first brokers for Invitation Homes to start buying in Chicago. And I've dedicated my career to that space since then, and involved in everything with our company from raising capital for our own investments to working with institutional investors. And Evernest is really in our company in the single family rental space is dominated by small mom and pop investors. So that is the majority of our business, although we build a lot of our efficiencies on the larger investors. So been in real estate for a long time, and I have a passion for it, and happy to be here.
Fantastic. Well, thanks guys for being here. Let's jump into the news. So from Benzinga, Zillow's ChatGPT plugin, your new AI house hunting assistant, or just another chatty Cathy. I don't know if did all of you guys get a chance to at least skim these articles ahead of time?
Yes.
So know what that's all
Something
about.
like that, yeah.
Yeah. So this is kind of a free-flowing thing. If anybody has comments, just go ahead and jump in. And otherwise, I can kind of prompt you guys. Or
I could jump in a little bit because we are looking at AI in all of our processes on the property management. So we have roughly 5,000 investors that we manage for. And what's amazing is you take some of the human element out of clicking a box, is a home actually has a lake view or ocean view or some of those different features, and can pull in a lot of data into one space. And so I think it's a no-brainer that Zillow is doing this. And you can really have some more natural conversations around the house hunting, because most people buying a home starts on the internet, and most of the time when they the first agent they talk to is the one they use to buy. And I think this is another thing that's a little bit of a front to buyers, brokers, because you can get a lot of things answered and a lot of data and information about the home and the area. It'll just be interesting in how they put guardrails around that for fair housing and things like that.
Yeah, just to build off that, I think that the AI space in general obviously is moving pretty fast. I had this conversation with my wife just yesterday as our wedding anniversary. So we were talking in the car, and like AI, I think is a really good thing, but it can be really dangerous and really scary as well. So I think this would be a good thing, good use of the tool. ChatGPT is obviously leading the way, I think, with respect to what people are talking about with AI that's available to the population of people. Zillow is obviously a major player in the real estate space. Whether we want it to be that way or not is a different question. Depends who you are. If you're participating, as an agent or someone who's using the tool, or if you're someone who's competing with them, I guess it depends. But I do agree that connecting the dots like that using AI is definitely moving that. It's just inevitable. It's just a question of regulation. Will there be any major governance or not? I don't know. Hard to say.
Yeah,
I agree with both of you guys. I'm going to take the opposite side a little bit, mainly because I'm in the mobile home space. And first of all, Zillow doesn't seem to understand the mobile homes as well. And I don't believe they have a big drive to understand it, because there's not a lot of their customers on there. And it's a more complicated topic. I've asked ChatGPT about mobile homes, and it's fairly accurate, but not as accurate as a lot of other things. So that makes it a little more difficult for the people that just want everything done for them, which means those people are probably going to go a different direction and never go to mobile homes, because a lot of people just want this box handed to them and everything done. And we all know that business in general is not that simple. And we are usually more successful when we find the piece that most people won't go after. So I do think it's going to make my life a little easier, but not overall. It is going to lessen the competition in my space, I still believe. And I did want to ask ChatGPT what it thought about the Zillow. And then I remembered the data isn't that updated. So I am curious in the future when we have all these competing chat GPTs, what they think of each other. Just as fun.
Yeah, right.
Gone down that path with Bard, asking it what it thinks about chat GPT, and I asked him questions that Google could answer or that Microsoft Chat could answer, and Google couldn't. And it was interesting how that's all going to interact.
Yeah, I know in that article it did point out that it wasn't clear how it's actually going to work on Zillow, because I mean they can kind of get a conversation going about what they want in a property. It might just be easier to just go check the boxes, so we'll see how that ends up working.
It's interesting when you talk about data sets. So Zillow has a ton of data. So there's two types of you're pointing this to. Are you pointing it towards your own data and helping you organize that data? For example, with what we do with our company is we have all these different data points, and we're using some generative AI to pull all that together. So when somebody's on the phone, they can see everything that's happening within a property or a customer or a renter. And then there's pointing it outward and then letting it interpret some information and data. I think that's really hard because we found that it's not accurate. There's a guy who just got in trouble as an attorney who quoted all these case law that ChatGPT just made up. So
wow.
There's a long way to go.
Yeah. Well, hey, let's jump into the next article from the Motley Fool. Is real estate back? Here's why Opendoor and Redfin are soaring. It was saying NASDAQ was saying it was higher by 0.7%. The tech-heavy NASDAQ, while Opendoor was up by 7% and Redfin was 13% higher. Part of that was that Opendoor is selling its old book of homes. So as we know, they bought a lot of properties and that they had on their books that they are having to dump. So like I was just in Phoenix recently and they're a huge buyer there, right? So we were actually looking for properties for what we were doing, and there was a lot of Opendoor listings. So any comments on that?
I mean, in my space, we really haven't slowed down because I'm in the affordable housing space overall. And Opendoor, all the big conglomerates like that have not even touched because they don't understand the mobile homes again. You'll probably hear that repeating from me. If that's one reason this niche has worked for me, is I have less competition. I don't believe they'll ever get into my space because it's not an algorithm they can create, and they have to have some humans in there. It was a fun article to read because I actually was a little naive on some of the declines that it talked about because I've been going up in demand. My space has been becoming more competitive because of the affordable housing, which overall I do believe we have a affordable housing crisis challenge, which I know is possibly one of the articles we'll talk about. So.
Yeah, I'm a little bit somewhere in the middle, I would say, as far as the position here. I think that past performance doesn't necessarily dictate future performance, kind of thing. But at the same time, I'm reading an article, talks about they're progressively selling off their old book of homes, but the question is, what's going to be the next business model for these companies? I don't know. I'm not particularly keen on investing into a business model that didn't work. So if they're having challenges, but they're getting out of those challenges, what's going to change in the future? I guess then you layer in the ChatGPT AI conversation into all this, and like kind of how does that look, and are they going to adapt to that? I don't know. I'm not sure that we should use Opendoor and Redfin, probably a little bit different, but as indicators of whether real estate market's doing well, in my opinion, at least, I think it's going to be boots on the ground, localized market knowledge, and kind of transactional activity.
Yeah, I happen to be pretty intimately familiar with both of these companies, as I just recently switched jobs and I just joined Evernest about 6 months ago. And so Redfin's a little bit different because they're more of a traditional real estate model, except that they, hire their agents as W-2 employees. And both of these companies were doing iBuying. Opendoor is completely pivoted into more of a marketplace and real estate services based on data. So I was just at a conference in Miami last week, and they were out there pumping their data. And I have seen some data recently from Mike Del Prete from Boulder, University of Boulder, or University of Colorado Boulder, that shows that Opendoor has actually been selling homes at a profit. This more recent, because the home prices in most markets have leveled off. And so now they're able to play that game of buying low, selling a little bit higher, and then it's mostly fees and then all of their ancillary business. Redfin, I don't know if there ever will go back to iBuying because it did not work out as well for them, but they have a lot of other services that they provide. And both of these companies have a huge ground game on in-market construction services. And so they're out there selling that to institutional investors and things like that. Now, Redfin has shied away completely of ever selling any of their iBuying homes to institutional investors, but Opendoor integrates in. I have a portal. I can see every single Opendoor home that's for sale, that's in their pipeline. And as an investor, you can buy those homes, at the top of the funnel. And that's what these guys have. That is the most interesting thing. Same as Zillow, is they have the top of the funnel. They have it when people are looking to buy or to sell their home. They're seeing that before a lot of people. And that's interesting to me. And how they're going to monetize that, what's the right model, is who knows. But
right.
That's interesting.
Noel,
That's really good. Good insight.
You mentioned that they're really a data company, Opendoor. How accurate do you think that data really is?
Well, it depends what data you're looking at. Their rent AVMs, their value AVMs can be pretty accurate. Even though, you have the problem with any of these, with Zillow, with Opendoor, with any of these companies, you still have somebody there making a decision and pushing. And they're pushing, saying, we can push this a little bit because they're trying to hit the right numbers. And it's not all algorithms. Opendoor is less reliant on algorithms than Zillow was, but they still have their AVMs. They have their, for rent, for value. They're trying to look at where the market's going in the short term. But they have so much data from all of the homes that they've been analyzing and looking at both of these companies, they've analyzed every single housing structure or every single home, mostly single family in the country. And so they know all of these trends. They're looking at sentiment in areas. They're looking at, some data from the credit bureaus, trying to predict when people are going to sell, what's going to happen there, knowing the equity of the homes. So that is really what this play is to me, is data. And then they're trying to figure out how to buy hard assets and then resell them. And that's where they get in trouble.
Yeah.
Let's jump into the next one, unless somebody's got additional comments. All right. So again, from Benzinga, apartment rents keep rising as people are priced out of home ownership. I know it did mention Colorado, where I'm from, and Florida seeing rent increases, along with West Virginia and Iowa, or compared to West Virginia and Iowa, where their averages have been around 15% instead of 50%. So what are you guys seeing for rent in your areas?
It's crazy over here. I'm in Sarasota, Florida. I don't know. These gentlemen, I heard Florida. I forget where Noel said he was, but it's the home in a subdivision that would have been a $450,000 home back before COVID. The latest one on the market was like $4,200 for like a 2,600 square foot house with a pool. So, that same home was rented for a little less than $3,000 a month, about 3 years ago. So, I think that, it's got to accommodate the market and the general economics of the world and the US, but in this market down here, the infusion of people and the supply and demand equation. But at the same time, there's a tipping point, I think, where I don't think it's sustainable for a single family home. You're not going to have a whole lot of customers, at least, but there's enough demand, I guess, of people moving from other more expensive areas into this market in Sarasota, Florida, and the vicinity down here, Tampa market, Metro, MSA. But still, I think that it's interesting that the article says home ownership is becoming less affordable. How about rent? Apartment rents are also rising though. So what happens then if they're both unaffordable,
Right, they're in lockstep usually. Go ahead, Adrian.
I agree. That's a concern of mine. Obviously, I'm in the business of renting, so it's beneficial for me, but I have a lot of people have applied, or residents that live our properties that they can't afford the raise that's been happening. We've done our rent raises, not as much as we could have, but what we need to do to at least break even year over year as our expenses have gone up. I don't know what's going to happen with that issue. Unfortunately, I think the government's going to step in and mandate stuff instead of free market, but that's probably not the direction you want to go with this topic. The affordable housing space, though, there's more and more demand. There's less and less people building in it because it's not as profitable to build in the lower end as the mid-grade or upper end. It's not much more money, and you get a lot more rent. And people are taking the lower end and making it nicer, so then they can get higher rents. We play pretty conservative. So an example is we purchased a property recently. I ran my numbers at $1,600 a month and pushed it out at $1,800 for the rent because I knew I could push it. But I want to be conservative because if this thing implodes of this rent going straight up, then I'm still going to be safe, still be able to make my payments, still be able to make money. So that's the business I'm in, is being very conservative with it, but I'll push it while I can.
Yeah, so we're seeing, everything both of you said is very true. I think, looking at, there's obviously an affordability issue in our country in the lower income areas because rent growth or income growth is not as strong. I did see some numbers today talking about how rents flattened out for a while or even went down in some markets. And then that allowed wage growth to catch up. We're seeing, the first thing is a lot of people, you can't compare apartments to single family homes. They have different profiles, different growth profiles. Single family homes, you have not seen as much of a rent decline. I was actually surprised to see this about apartment rents because I've seen more data saying they've gone down a little bit. Not from the narrative of there's too many apartments being built, because that isn't actually true because of the difficulties of building, getting debt and financing equity to do those deals. A lot of them are just sitting. Same with single family homes. There's a ton of supply supposedly, but there's not. Supply has been going down since 2010 and it hasn't gone up, and it's probably not going up anytime soon. So we're seeing multiple people, multiple applicants for homes. I think in the higher rent band, when you're talking about $4,200 in rent, that's a little bit iffy. And then in the lower, because you're not building more houses, you can't expect the same kind of rent growth in affordable homes when you don't have the wage growth. It's that middle area. We're seeing multiple applications for homes, but we did see a pullback from June of last year up until the first quarter, and then things started picking back up again because there just isn't homes for people. There just aren't places, and it's not just because people have low rates. It's because there's just not enough supply of homes or supply of units. And I know there's another article you have in here that talks about that, is that it's not going away anytime soon. You can't rely on just the home builders, and there's not distress. There's not a lot of foreclosures. So what's going to increase supply to let rents level off? Because we look at affordability. We don't rent to somebody unless it's within 30% debt to rent, because it's just too high risk. If you have somebody pushing, they're going to be you can find people that will pay that higher number, but they're going to be a high risk tenant. And so you'd rather have somebody who can afford to live there, and they're not just, scratching and clawing every penny in order to pay their rent, because if one little problem happens, their car breaks down, they can maybe not pay. So, and that goes with people who are making $100,000 a year to somebody who's making $50,000 a year. It's a serious issue.
Yeah, we just had somebody on LinkedIn ask what is being done to confirm renters can afford these homes prior to them signing the lease. I definitely can comment on that, but
sure.
If any of you guys want to jump in.
You go first this time.
Well, so, I live in the rent to own space. And so we're working with investors, and it's just really important for us to put a good renter in that can pay. And so we actually work with lenders up front, because with rent to own, the end goal is for them to end up buying. And in order for them to buy is for them to get a loan through a bank. But in the meantime, they're just renting from us. So we lean on lenders to help qualify them. get docs and all that. But we also do our first pass, ask a lot of questions about, you know, their job history, what they're making, savings, because we don't want to have them on fumes and not have enough money if things go a little wonky. So that's kind of our process.
I'll add in some things that we do that's a little non-traditional, because we do the traditional checks, you know, how much do they make, their background check, but we really make the person prove that they want to stay there long term. I'm always thinking in that aspect of how can I set them up to prove that they want to rent long term. So we don't let anyone move in within a day or two. Like, our process just doesn't set up for that. Besides that, we don't want to work that fast. But if you need to move in 2 or 3 days or by Friday, you are going to want to move out at the same speed. So you have to basically go to the property. You don't even get to talk to us at all. You are directed to the property. It's a self-show process. So now you've done some work. You're not just clicking on that Zillow button that I'm interested. You're showing that you want to go there. And then we also feel like it helps us protect everyone with fair housing, that everyone gets the same treatment. So everything we're doing consistently is thinking, how can we set this up so someone will stay very long term? So very, very clear expectations. We take about an hour and a half, 2 hours just to review the lease agreement. And then we won't even let them sign it right then. We do that over Zoom so they can think about it. Everyone's on camera. We're recording it. But a lot of what we're doing is we're making sure that they're okay with this agreement long term. Because short term, if they move out in a year, it's not good for them. It's not good for us. But if they stay a long time, we have stuff in our agreement that's really good for them, and it's setting them up for success. So that's what we're always trying to think of. How can we both win long term?
That's cool.
Yeah, I agree with Adrian, everything you're saying there. Like, we're working at a pretty large scale, and we have several different layers. So we have the initial check of income, background, if there's been any evictions, you know, different things like that. And we have a partner that, you know, qualifies that tenant the same way every single tenant. So you talk about fair housing. When you have different people at different levels trying to qualify somebody, and there's different, because we're doing these for homeowner or for investors that own these houses. So they make the ultimate decision, but we don't give them the information that they can even violate any fair housing. It is just like, here's a profile of the person as far as their qualifications, checking their income, making sure they have a job, doing all of those things. And then the same thing. You don't want to go too fast. You want to make sure they want that house. We do self-showing. They're having to do the work to go in there and you know, provide all this information to us, and you know, using a link to their bank account to be able to pull in their income and verify that they can actually afford that house, because you can always find somebody who'll pay more, but you just really want the right person.
You're linking to their bank account?
Yeah. So when you do credit applications, you can, it's called Plaid. It's the same thing when you're doing with, so we're not looking at, you know, their day-to-day bank account, but it gives you a snapshot. It gives you the ability to see, to make sure that they actually are getting the income that they're saying. And it's just part of the underwriting process. It's the same thing if you were going to apply for a credit card, a car loan, or any of those things online. You can get some good information and make sure that they can actually afford, because that's the most important thing, is if make sure they can afford so they can be successful in paying rent. It's not just about pushing every little penny.
So they sign off like through the Plaid platform, saying, yep, you can see that. Okay, I wasn't aware of that. We're going down a rabbit hole a little bit here, but I'm really interested. Like, you guys both said you were doing self showings. How do you protect yourself and your investors and the property?
There's a lot of checks and balances of it's not just call and get a code. It's giving a credit card or a debit card, giving a ID, and tracking who's coming in. I mean, we know every single person, vendor, everything that's coming in and out of the house. And that's just enables you to be more efficient, because if you have to have assisted showings on every house, then you're kind of living and dying by the schedule of the leasing agent. So we're able to allow people to get into a house at different times. And then, you know, you do have to make sure that, you know, you're following the right security protocols to protect that that investment, whether it's your own or somebody else's.
You just use a regular.
We're not using the credit card, but I like that idea. I'm going to think of that. I haven't heard of that before. One thing that we are using is Simply Safe, the security system. I think it's like $15 a month, and we just use painter's tape to get it on the doors and then the motion sensor. So that's all we're really doing is the doors and motion sensor. And they have to go in and turn that off, and then they have to turn it back on, and they are liable in that period between when they turn on and turn it off. So we have when they call it in, we have that logged by the call center, and then they are supposed to text us. Now, they don't always text us that they left, but if they don't log out, say hit away on that security system, they're still liable for it. And we'll give them a call, or we can always go and check on the property because we can just log in and see that. And that's given some peace of mind that the property is not, someone didn't move in there or damage it or come back late at night.
Oh, so you're just putting up a Simply Safe thing temporarily, painter's tape on the wall, take it down. It's all battery operated.
It's $200 or so for the system. And like you said, it's battery operated and plugged in. And it has worked whenever all of a sudden there's something going on and we don't know anything. We let the police show up. We never have anyone that has actually broken in. I think a security system just keeps most thieves out. They just go next door that doesn't have one. The challenge has been that someone has mistakenly left the door unlocked, and then somebody else came to the property, looked at it, saw the door was unlocked, didn't get the full instructions, walked in, and the alarm went off. But we still rather that than, as Noel said, scheduling someone to be out there all the time. And that's far between.
Yeah, cool. All right, let's jump into the next article from Benzinga, Investing Like Trump. Here's what the former president's portfolio looks like. It's kind of interesting snapshot. I can kind of read off some of the stats unless you guys want to jump in with some comments.
Go for it.
All right, let's see. His New York City real estate, golf courses, and winery are worth $720 million. And then $840 million were including a stake in Trump Media and Technology Group. Looks like he sold his DC hotel and refinanced a San Francisco office tower after he left the White House. This left him with cash reserves of $425 million. And so the bulk of his investments were in bonds, treasuries, and money market funds. And the biggest equity position he has is in Owl Rock Capital Corp, founded by veteran financiers Blackstone, who I'm sure you guys are all aware of, KKR, and Goldman Sachs.
Be interesting to see how that office building is doing in San Francisco right now.
Say that again. I missed that.
I said it would be interesting to see how that office building is doing in San Francisco right now. I think they're at cell phone usage in downtown San Francisco is 35% of what it was pre-pandemic.
Oh, that's an interesting indicator. Cell phone use. Yeah.
Yeah. Where in New York, I think it's at 65 or 70%. But I don't know. It's hard. We would all like to be in the position to be able to make these types of investments. It seems on a lot of these things, he could be pretty exposed, but, be interesting to know what kind of non-bank lender they are, if they're commercial or if they're residential. I mean, Trump's been focused on commercial real estate. So there's been a lot of cracks in that business. I think we're all here focused on residential real estate. And it's staying pretty resilient long-term and even short-term. So.
Yep.
I think a lot of those names that you mentioned off that he's invested in match his ego. So he likes to have big name stuff. I didn't hear anything with Mobile Home World. Obviously, I'm biased again. I'm not sure if you all know that Warren Buffett, he bought the majority stake of Clayton Homes, a decade or so ago. And we know him to be the more conservative, long-term, successful investor overall. So, comparing the two, there's less ego in one and a longer-term streak.
Equity Residential has a huge mobile home investment as well. We were talking about Zell and all that. A very, very big mobile home investment.
Cool.
Yeah, I would just add, I think that someone said this, I think for the most part, it seems, somewhat, for me at least, irrelevant to what he's investing in because it's so different than the asset class that most, residential or retail investors would get into initially, at least. So it's almost like for me, it's like drama a little bit, to be honest with you. It's like just kind of news and just kind of fun to read, but like really is it relevant? I mean, probably not as much for most people listening to this, I would think. What's more relevant, I think, I'm more like I said before, the boots on the ground, like get it done, do your next deal, do your first deal, kind of get into the space. That's a lot of what I focus on. And this kind of stuff, as far as his investments, really, I mean, as much as it's interesting, it just doesn't really bring a lot of relevance to me personally. So I don't really have too much to comment on besides that,
Yeah, same here. Let's go to the next one, again from Benzinga. Love affair with stuff propels self-storage industry forward.
I love the self-storage space.
Yeah.
That's not my niche, but I have taken some of my money and then invested it into friends that have self-storage. I love it for the business itself. And then I like diversification. So I'm really good at my one thing. I make my money there and I take my money and by diversifying, put it into other people that are really good at what they do. And I think diversification is as far from what I do as possible. So that could be location. So I want outside of Florida because my investments are in Florida, preferably. And then I want it to be not the single family world. So that puts self-storage as opposite. It's a business. We don't have to worry about the landlord laws. We don't have to worry about fair housing. Can you evict or not? It's a business. And they've done a really good job in the last few years of taking it, we'll say from the 1960s and 70s, bringing them into the Google AdWords space and just getting them online and bringing them to the 21st century. I love the space. I don't personally have any of my junk in self-storage, but people we know love it.
Yeah, I'm similar to Adrian in that capacity, in the sense that a lot of my friends in the commercial real estate space definitely love self-storage, and I'm interested in investing into those kind of assets, but I don't actively do that, as a regular, operator. But I just looked at the stats. It says here, 1/5 of Americans use self-storage, on the 15% said they plan to do so. So that's like more than a third of the population utilizing the service. That's a good indicator, I think, as far as it's on the rise. And then I like the comment you said there, Adrian, about diversification, be a different asset class, different location. That's pretty smart too. I would agree on that.
Yeah, I agree. I know some guys who do really, really well in the self-storage business. So you need it. There's especially so many people moving and jobs. I mean, I think in where I live in Colorado, I live in Steamboat Springs, self-storage is huge because nobody can afford a place to live. So they have all their stuff in storage while they're trying to figure out where they're going to live. And so definitely a good business. And I agree with the diversification.
And if and when we have a downturn, if we ever find out what that really means again, and people start moving in together because they can't afford their place, they're probably not going to get rid of their junk. They're going to go put it in self-storage.
Yep. One other thing they mentioned was people that have e-commerce businesses. They're like, small versions of like an Amazon. They have massive distribution centers and stores. Yeah. Somebody might need that for their small business.
Right.
Yeah, I've got a friend, couple brothers from high school that got into self-storage years ago, and they are doing really well. I'm like, dang, I had no idea.
Yeah.
All right. Well, hey guys, let's take an ad break and we'll jump back into it after that.
Excellent.
Great.
Hey, it's me, Antonio Holman, founder of United States Real Estate Investor and producer of This Month in Real Estate Investing. Are you ready to ignite your financial freedom with what has been called the hottest REI strategy around, or should I say strategies? Enter Jason Palliser's 2-day investment blueprint, where you will learn the secrets that the real estate investing community doesn't know because they never had a reason to before. With Jason's 2-day investment blueprint, you will learn how to tackle real estate deals with over 40 different strategies, which means your chances of losing another deal nearly disappears completely. In Jason's 2-day life transformation intensive, you will learn how to generate more deals, close deals faster, win more deals over other investors, multiply your real estate deal strategies, and much more. Jason's 2-day investment blueprint can help you grow your REI business to 6 and 7 figures faster with much less aggravation. If you want to learn how to invest in any market in the United States, even the tough markets, and close multiple deals per month, visit 2dayblueprint.com. That's the number 2dayblueprint.com. And make sure you tell them you heard it here on This Month in Real Estate Investing. Don't believe the no more good deals hype and visit 2dayblueprint.com today. Now, back to James with This Month in Real Estate Investing.
All right. So our next article from JD Supra, expanding federal and state restrictions on foreign investment in U.S. real estate. We've talked a little bit about this. In fact, I think that was last month. Anybody want to jump in with comments on this?
Yeah, I could jump in, I guess.
Yep.
This is about land, right? And
It looked like it was mainly about land, yeah.
I mean, there's been a lot of stories about China buying land or Chinese buying land in Arizona and then buying water rights, and I think I have no problem at all with this. Our land is one of the great assets we have in this country, and we rely on that for a lot of the GDP of the country, and food and water and all of those things. So I would be interested in what everybody else thinks about like larger, very wealthy individuals buying up just as much land or more land than anybody. Not that, I don't know if there's a problem with it or not, but it's just interesting to see, all that land out there that's a lot of it's getting bought and, held, which I think is great if it's held for generations and it's open space and things like that. But no problem with foreigners restricting foreign entities from buying up our actual land. I mean, it's a big deal.
Yeah.
Yeah. In general, I'm free market, so I'm cool with it.
Yeah.
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 I mean, I'm trying to think. I feel like there's got to be, for sure, and I didn't have a chance to read this whole article, so forgive me for maybe if it's already mentioned here, but the regulation, there's a balance there, I think, as well, because I do agree with Adrian about free market, but I think also there's got to be some parameters that we don't have too much, transacting with foreign, especially potential riskier type of investments from outside U.S., entities or whichever. It's beyond my pay grade as far as what that would look like specifically and the risk associated to it, but I know that there's definitely going to be risk, and I would think that our government has the right people in place, hopefully protecting our country in that capacity and keeping the assets like Noel said about, our land. I think it's going to be used for the right reasons, right? So we don't want to have, I don't know, just terrorism type things or whichever, different types of investments be made for the wrong reasons. And that's a very complex matter, I would say. So I don't know how much deeper I can go besides just saying we want to be careful with that, I would suppose. Yeah.
That was the main point of this. Just anything near airports or, data centers, that kind of thing, and water. So, and it did say that a lot of other countries are doing the same thing and putting some restrictions. I guess, the other thing is like, if we as Americans want to go buy in foreign countries, if we're putting the brakes on them buying, like it's like they're going to be like, screw you, right? So.
Well, I did hear an interesting angle about this whole international investment at a recent exchange meeting I attended. They were talking about, folks from Europe looking to get their way into America, citizenship and stuff like that, buying, just raw land as a means to be able to start doing that. And they were talking about basically, the premium that a foreigner would pay to get the same piece of land that we would pay for like 10, 15 grand. They might pay 50 or 60 grand just because it doesn't mean much more. And it's for them, it's small beans as far as what it could open up their possibilities to get into the country, I guess, and different things. So that was an interesting angle. I think if it's about getting the proper people into the country that want to support the nation and grow the nation, then I'm all for that for sure. And it's obviously capitalistic for us as well. If we own the land, if we can transact and sell it for a price that makes sense. But I think if it's larger amounts and the wrong reasons, obviously I think all of us want to protect that, you know?
Yeah. There's a really amazing book called Emergency written by Neil Strauss. He's a fascinating guy, but he was kind of going down this rabbit hole of prepping and ended up going to St. Kitts and bought an apartment there so that he could get citizenship in case he needed to bug out of America. If you guys ever want to and have the time to read a good book, read that book. It's okay. Really good.
Excellent.
Yeah.
What do you guys think about foreigners owning housing or commercial? Or there's a difference between owning the asset and investing in a vehicle that owns the asset. Those are two kind of different angles. But I think considering that we rely on private investment for our housing stock, for our commercial, all of that, like, I think it's okay, but there's probably be some restrictions coming with that down the road at some point, I bet.
No, are you saying like as far as the real property, like the difference between the actual intangible, like investing into a fund or something like that versus the actual land or the property itself? The differences there. Yeah. Yeah, I think I would like to see most of us, most of the country retain its ownership internally to the U.S., but maybe obviously attract investment for the growth of the country. Yeah, I like that model better for sure.
Yeah,
agreed.
Yeah,
and then renege on our debts.
What's that?
And then renege on our debts.
Yeah, yeah.
It's funny because, like, as Americans, we're all foreigners. We're a big melting pot.
Right. Yeah, I know. It's the balance, right? Yeah.
Yeah. I don't know. Antonio, our producer, just put in the chat. Bill Gates is considered the largest private owner of farmland in the country, with some 269,000 acres across dozens of states.
Yeah, I heard that. I heard something like that recently about the whole fact of who owns the most land and stuff like that. His name came up. So
yeah,
my only issue with that is that land will probably never be in the hands of a small investor or owner or individual owner that will always pass. So that's my only issue with that, is that it kind of is pushing out, any of us owning any of that land most likely.
Yeah.
Yeah, that's a good point. Who knows what his plans are?
Right.
Conspiracy theorists might say, it's always going to build some kind of chips to put in us or something, whatever. But
yeah.
So, all right, hey, let's jump to the next article from the South Florida Sun Sentinel. Real estate's popularity as investment tumbles to a 5-year low. There was a Gallup poll, and real estate was number one from 2011 for 11 straight years.
No
surprise. Currently the lowest since it was in 2018, as far as that poll goes, due to weak pricing, shaky economics, and high interest rates. It also said kind of depends on what types of investments those people that are voting in that poll consider real estate, since commercial versus single family is a totally different animal, right? So, and even though real estate is down, it's still more popular than things like gold and stocks and savings. So, did I leave anything on the bone for you?
Sorry.
Go.
It was interesting because it caught me a little bit by surprise. When we're in our world, that's all we hear.
Mm-hmm.
So I was a little surprised of it, but then I started thinking more about it. I think the outside, so the people that are trying to get started, only have one or two, they probably are pretty frustrated right now because of rates. The traditional way of buying real estate has been more difficult, and it just hasn't been as easy as it has been for a decade now. You just buy, the property went up in value, you buy with rates because they keep going down and down. Like, now you have to have some type of skill set, we'll say. So I can see how it could be frustrating. I mean, for people getting in that have not turned this into a real business and learned the hard skill sets to it.
Yeah, totally.
Yeah, I think Adrian, you were saying, just to kind of paraphrase what I think you're saying, I think I'm on the same page. Like the average individual, the layperson that's not in the trenches of building a real estate investment business doesn't fully understand the nuances of how we can access off market deals, or how we analyze deals and things like that, or access different types of non-bank lending, like I think Noel said before. So that maybe from the surface level it might become more challenging, and therefore they start shifting focus on other things that are easier to enter into. But if you pull back the curtain a little bit, you get to learn some of the stuff that we do, all of us here on a daily basis. You start realizing that's still, I think, tried, tested, and proven the best, type of investment there is compared to everything out there. It just depends on the strategy and the risk mitigation. What kind of real estate deal, how big of a, are you doing the Trump stuff? Or are you doing the localized, smaller asset class, but get your foot in the door, leveraging properly, all that kind of stuff, I think plays into it as well.
Yeah, I agree. I agree with both of what you're saying. I mean, what we're doing, it feels like it got a little too easy for a while, especially in the single family rental space of raising capital and amassing homes. And I'm seeing a lot of groups that are suffering operationally. Also, for the smaller investor, there's a couple of things. There's the last financial crisis that happened that a lot of people are still having, that's affecting and influencing what people are thinking that's happening now. And there's a lot of financial narratives being pushed around that, we're going to see, I agree that we're kind of going into a downturn and things like that, but are we going to see like a huge crash in real estate? And we're going to, like what happened in 2008, the credit profiles don't show that. And that's probably not going to happen in what I see, but there's a lot of narratives being pushed. And the other thing is that for a small investor compared to 10 years ago or more, it's really hard to own a rental home, for example, and manage it. You have to hire a professional management. And I'm not saying that just because I'm in that business. We're just seeing that it's getting harder, especially in any kind of urban areas, for the regulatory world out there and the landlord tenant laws and things like that. It's much harder to own and manage real estate. And that kind of pushes a lot of groups or cities or complain about larger investors, but then they make it really hard for an investor to own. And that just pushes it into the hands of the bigger investors that have more scale and can figure out, navigate all of those different, roadblocks to owning an investment property. So kind of see it, all those different things that probably influence that. And a lot of it's people just assume because everything went up that it's got to come right back down. And that's not necessarily the case. In, overall, it, happens from time to time, but I don't feel like we're going into that kind of environment.
And Noel, I'll add one more piece to what you said. I totally agree. But the smaller investor that owns 1, 2, that you probably manage a lot for, there's a lot of them out there that just think that they can manage. And personally, I don't think many people like being a landlord or are even good at it. Besides the laws, like they're just not good at managing their properties, and then they're really bad at keeping with the laws. So they should just from the beginning, or as soon as they realize it's not for them, hire someone like you.
Yep.
If more people did that, I think they wouldn't get burned out of the business and put those numbers in from the beginning. What are you going to charge? And actually put that in their buying numbers. And then I don't think as many people would be burned out.
Well, also it's, I was just going to say one other comment is a lot of small investors look at cash flow and they just look at like, okay, I'm making, it's their, many times their accidental landlord, it's their, their grandma's or parents' house they inherited. Now they're renting that out, they're managing it, they're trying to figure out, what we're trying to do is teach them to be investors and to leverage what they have and buy more real estate. But a lot of them aren't really looking at the true ROI, and they're not looking at what it means to them in 5 years compared to like this year, and how they're maintaining the houses and all these different things that they have to be taught to look at. Real estate, in my opinion, owning residential real estate is not a passive investment. It's really hands-on. Even if you hire a property manager or somebody to do it for you, I sometimes don't like the word turnkey, but it depends. So it's difficult to own. To your point, Adrian, there's a lot of money being left on the table when rents are going up and values are going up. It's really easy, and then you realize how much you left on the table the last 5 or 10 years that you could have gained in ROI on your property, and now things are skinny. Taxes have gone up, insurance have gone up, labor's gone up, and you just missed out on this great time to be operationally efficient, and you weren't. So, to your point.
I could add just one thing to that. So just a question I ask my clients pretty often is like, are you looking to build a business or are you looking to grow your income? Because in real estate and real estate investors, like most newer investors don't think about the business plan. They just think about getting the first one or getting that next one that are on a small scale. And what happens is the management part, like we're talking about, is kind of forgotten about. And then they don't realize that it requires some structure and systems, or at least a process or a company or a vendor or somebody like a property manager or someone to help you do that, right? Because initially it's like, oh, I'm just going to get more cash flow. And then we start seeing rates rising and rents are rising, but they're not necessarily keeping up, right? So then you got lower cash flow and you're like doing all this work to get a few $100 a month extra. And then that's not even including a property management company. So that's probably, I think, also some of the sentiment behind maybe the article that, the newer retail investor doesn't have the vision for like growing a company. Maybe they're growing like one or two and they're looking at the numbers getting pushed down because of rates and stuff. So yeah, just encourage everyone listening to like kind of think about, do you want to have a business where you grow many, or you just want to do like one or two on the side? Like maybe look at more of a passive type of model. Like I think Noel's kind of, mentioning about the whole outside US investors, like just what about inside US? Like look at just getting the cash flow you want, but through a different vehicle potentially.
Totally agree.
We could go on and on this subject.
Yeah.
I'm like,
I know, right? It's
No,
like
I don't want to jump in.
You tell
I
we're all
just got
passionate
myself
about
off.
this part, right? For sure.
Yeah. Well, let's see. Let's go to another one here. From Benzinga again. Multifamily investment is in economic chaos, but some regions are bucking the trends. I know a decent amount about apartment syndications and stuff, but you guys want to jump in on what you know and see happening?
Rates are higher than most cap rates, what I'm hearing in the most markets, right? Like you're not seeing really cash flow and there's defaults and there's all kinds of stuff happening. A couple of good friends of mine do commercial finance for agency debt and stuff like that. And they also, one gentleman, syndicates, he's got 150 million under management, I think. Is a friend of mine. Like, and then obviously you see larger names out there, I'm not going to name drop, but you guys can do research about it and see who's out there doing raising money for apartment deals on YouTube and stuff like that. You can kind of put two and two together. Like there's different perspectives, I guess, on this whole thing, but the fundamentals are like, I think as far as rental property investing, the thing I think about and the thing I coach my clients on is pretty much, we want to have a great deal, but we want to think about cash flow. So if the asset's not going to cash flow with the debt you're getting, to me, that's a deal breaker for me personally. Obviously you can hold it for the long term and hope for the rise and the appreciation and all the tax benefits and stuff. And this is like a general thing. Obviously everyone's going to look at their own investment appetite, but I think multifamily is getting pressure because of also the loans that are coming to be paid off or refied. Balloon payments are being due. I forget the number, but it was a large number that now rates are where they're at. So these owners or syndications are going to have to liquidate, or somehow reposition the asset. So lots of pressure. I didn't read the article again on this one. Fortunately, I have a chance to get there, but that's what I know from personal contacts and friends and investors I'm in touch with. So
yeah, you hit it on the head. Those floating rates, balloons coming due. Like I saw this 5 years ago when I was in a multifamily mastermind trying to figure out where I wanted to go. And I ended up in lease options and single family rentals for multiple reasons. Yeah. But I saw all these new syndicators trying to get these deals and just not running their numbers well, not knowing what they were doing. And here we are with an opportunity for people to come in and swoop up.
There's a lot of folks. Yeah. Some of my friends and some of the names out there that probably you guys see in the industry talking about like taking over mortgages and seller financing and stuff like that. And that's all good, but I think there's still a timeline to that though. So it's got to be, factored in like what happens at the end of that period of time, whether it's a few years or whatever length of time for that rate you're getting locked in or you're taking over a payment on, still there's an end point. So just, I think be strategic. Again, back to the comment before, it's like sometimes we're short-sighted. We could become short-sighted because we see what can happen right now or in the relatively near future, but you got to think, I think longer term a little bit and see, is it a good asset for what reasons, underrate it that way.
And some of the people that have concerned me that I've heard talk about the syndications, that's their one thing. They haven't even done other parts of real estate. And they're really just looking at the syndication fees that they're going to make. They're not looking at the investment in a whole in the long term. We put some money in a mobile home park syndication. It is sub 100 units, which I think years ago, like, you wouldn't even look at under 100 units. This was like 30 something. Because of the appreciation so much, they are able to syndicate these smaller deals. And originally he was going to use a bank, and then it was right when the banks were really tightening up and brought the LTV down. So he's like, I'm just going to see if I can do this with all private money. And he just brought in all accredited investors, and he funded it that way. But he already had experience in all the different areas of investments, even though he's only making his money through the syndication. Sorry, he actually put some of his money in, but even if he didn't, I still would have trusted it because he knows real estate in general. He's just not looking for a syndication fee.
I have one comment. I know I saw I put a ad break on here, but a lot of people underwrote these deals based on IRR and even mid to long-term IRR. And they're in some of these syndications. There was a big Arbor deal in Houston that was $300 million or so that failed because they underwrote that deal. They underwrote an IRR. They weren't looking at the current cash flow and current cap rate and how that deal performed today or when it was stabilized. And a lot of people are going to get caught, but the fact is there's a ton of demand. There's a shortage of apartments. They're, going forward. And I think the apartment industry will be fine, but the next, as to this article's point, the next 12 to 24 months are going to be tough for some guys who had a little bit shaky, banks who had shaky underwriting, and operators who were able to get deals based off of IRR. And IRR is that's a pro forma. I mean, do you guys buy deals based on pro formas?
No.
So I did, the
Reference point.
storage I'm in, the mobile homes parks I'm in, I did look at what the IRR is, but I asked the question that you just said, what is it? Is we don't get any more performance out of it. What is going to be my return on what it's doing today? And I was happy enough with that. It wasn't ideal, but I was happy enough. We weren't going to lose money there.
And then you see the future potential, but you don't bank your whole deal on it. You're not buying a negative cash flow. I mean, some of these deals are negative cash flow, and thinking on rent growth and appreciation. And, now we've got 20%, decline in market and multifamily values, not as much rent growth. Like, these guys are screwed. But that's the difference. It's too easy. I would
only look at a deal like that if it was, I'm sorry.
Go ahead.
I'd only look at a deal like that if it was something I could force appreciation through renovations or some obvious mismanagement or something like that. Yeah.
Value add, right? Yeah.
Yeah.
Well, hey, let's take another break for our next sponsor.
It's me again, Antonio Holman, founder of United States Real Estate Investor and producer of This Month in Real Estate Investing. One of the best ways to increase your company's brand awareness and increase warm leads is to create written content online. But as we know, content creation can be very time consuming and not very cost effective when having to pay professional copywriting fees. It's time to use REI Content Packs. REI Content Packs done-for-you content packs give you the tools, flexibility, and cost-effective way to increase your brand's visibility and online presence without spending hours or even days stressing on what to create. REI Content Packs are a collection of high-quality, ready-made real estate blog articles exclusively created for the real estate investing industry. Can you imagine the possibilities if you could do 2 to 3 more deals per month without increasing your ad spend? REI Content Packs can help you do that. Can you imagine getting unlimited online traffic, increasing your Google ranking, getting more leads, and making more money? REI Content Packs can help you do that too. To get started increasing your brand's content and lessening your workload, head on over to thismonthinrealestateinvesting.com/REI Content Packs. That's thismonthinrealestateinvesting.com/REI Content Packs. It's time to get off the online marketing hamster wheel. Try REI Content Packs today at thismonthinrealestateinvesting.com/REI Content Packs. Now back to James and This Month in Real Estate Investing.
Okay, from commercial property executive expanding into industrial, diversifying for long-term success. Are any of you guys familiar with industrial or have opinions on what's going on with it?
I'm a little familiar with it, but a lot of distribution centers, those types of things. But a lot of people also invested into Amazon, syndications and triple net lease deals with Amazon that kind of got hurt. But I don't know a whole lot about industrial. Played with it a little bit back in the day, but seems like, again, if it's a good investment and you do your underwriting and due diligence, and the logistics of in our country is not great, and there's still more need for focus there. But
yeah, how did those investors with Amazon get hurt? What happened?
Amazon pulled out. I mean, so a lot of these were triple net leases that in the long term they got hurt, but they were able to get out of some of the deals. But Amazon, because we were looking at buying homes in areas where Amazon distribution center was in, and most of the time Amazon leased those, just like a Walgreens or CVS or anything like that. And so then when they decided to just not move into that area, those investors got hurt, just like any other type of real estate investment that you're taking a risk on, a triple net lease tenant.
Oh, okay, so byproduct of them just being in the vicinity. They're building their own facilities too, right?
They are, but a lot of them, what I've seen, are actually being built by a developer, and then they're triple net leasing it from them.
Yeah,
that gives them flexibility to do what they did, which was just pull out.
Yeah.
Where my market in between Plant City and Lakeland, the road right there separates the two counties, County Line Road. For years, it was on the map for the fastest growing road in the country. Depends on who's writing the article, their definition of it. But it's because the shipping companies, the warehouses, deemed it as the hub that they were going to go to. Polk County is a little bit cheaper land, cheaper taxes, and it's within an hour of the Tampa port, an hour and a half from the Orlando port, 3 to 4 hours to the Miami, and 3 hours to Jacksonville port. And it's inland some for the hurricanes. So they kind of deemed it, already had a lot of warehouse space, but they've been building hundreds of millions of square feet, I think, every month. I mean, they've been knocking everything down to get it built. It was the first distribution center in Florida for Amazon. They are still there. I'm not sure. I'm curious if they own that building or not. But Home Depot has come in, a bunch of them. So those are a lot of my residents that work there. So I am kind of housing them, but we already had that going on before this big boom of it. I'm not overly concerned. Maybe I should be, because when things go straight up, I do get a little concerned that they'll come back down, but they're still building right now. This has been years and years, just building and building and building of it. We're a consumer country. The toilet paper shortage of COVID, we've decided that we need to have even more stuff in our warehouse because we can't go a week without toilet paper. I'm not sure if that balance is going to come back or not, but people want their stuff now.
Yep, for sure.
Yep.
It did point out that, where populations go, you just need more industrial space. So places like Florida are getting that inflow. So there you go.
Oh, yeah.
Good.
I love being able to get my Amazon order in 3 hours. I don't
amazing.
do that 2-day thing.
Yeah.
Right.
It's amazing.
And the one part of the article I'm looking at here, it says, things to keep an eye on. So it says, according to Maurer, I'm not sure, Maurer is one of the people they interviewed, whichever, pushed many companies to pivot to a just-in-case inventory model. So you guys are talking about that now. With firms increasing their footprints now more than ever in the Southeast, they expect to see a further increase in import volumes and high demand, considering the ongoing shift in manufacturing away from China. So there's a lot of different, very international macroeconomic type of things, I guess, kind of playing into this. And they're also about EV, like electronic vehicles, and the production increase for that as well. So I think in that capacity, but then to contrast, like we were talking before about interest rates and stuff like that, there's another part of the article talking about, will the demand resist economic pressure, and the whole thing with interest rates rising and vacancy rates and stuff like that. It's just interesting. There's that, again, that balance. I think there's not a perfect for sure type of thing. That's hence an article, I guess, right? It's an interesting topic to talk about because it's not perfectly always the same way.
I've got a couple friends that work for Prologis, which is a big industrial company, building and managing and stuff. It'd be interesting to get somebody behind the curtain, get their perspective on something like this.
Yeah.
Hey, let's jump into the next article from Benzinga. If you believe the U.S. has a housing shortage now, you won't like 2025. Just a little note here. It said the National Multifamily Housing Council says the U.S. is short by 4.3 million apartments by 2035. So
I
that's
saw some data at a conference I was in Miami last week. They were talking about more by between now and 2020 or 2035. It's more like 12 million housing units will be units will be needed.
Wow.
I don't know where all the data comes from and things like that. I actually have the presentation. I think I'll have to look at it, but there's a shortage of housing. I mean, it's just what it is. A lot of people quote the 12 million vacant units we have. That puts the U.S. at like 90% occupancy, somewhere around there, which is not bad. And not all those vacant units are move-in ready. That's what's needed, is to rehabilitate those units so they can be move-in ready. And that requires private investors to do this. It's not going to be the public sector that's going to do this. So, yeah, I mean, this is one of the reasons I'm more bullish on housing in the long term and midterm. But investing right, making the right decisions about the markets and things like that. But yeah, this is no surprise.
Yeah. And I did say, like, in this next couple of years, there's some coming online that were built and are going to be sold and moved into coming. But a lot of the builders, because of lending and just overall restrictions, permitting and all that, have just kind of put the brakes on as they've seen the economy starting to dip. So there's going to be this gap where there's going to be even more demand.
Builders' profits are at all-time highs right now, because they can control that inventory. There's no resale. There's hardly any resale inventory coming in. So the builders are in the catbird seat right now. They can control their inventory. And there's still supply chain issues right now. There's still supply chain issues with builders, and take away just the financing problems and equity problems. But like, it's still not that easy to build. Whether you're building apartments, whether you're building houses. So, and then regulatory issues, the NIMBYism that is happening all around the country. If you try to do anything affordable, just a lot of factors. And I know, Adrian, you probably understand that world very much.
Oh yeah, I was gonna chime in on exactly what you just said. You teed me up perfect. And I'm not the mobile home park guy, remember, but if they really wanted to solve the affordable housing problem quicker, I think that they would allow mobile home parks. There's very few municipalities that are allowing them to be built. They don't have to be the stereotype trailer trash and these ugly areas. There's some very high-end ones, and then you can make them affordable that are not eyesores. Now, if they just opened that floodgate door and just said, yep, we can build them anywhere, or even designated some spots, I don't believe that the manufacturers could keep up, because they are struggling to keep up, but they're going to still be faster, and it's the more affordable. That's why it's affordable housing. I know of a few being built, but overall, I have seen the government say we want to help affordable housing, but we don't want the most affordable housing, which is the mobile homes. Oh, that's my nice rant on the topic.
I would just add one more thing to consider. Like, I think alternatives to even just, the affordable housing would be, what about, I'm seeing like room rentals and stuff like that. Somebody talked about pad split, different things like that. So it's like different creative ways of solving, having someone have shelter, basically have a house to live in, have somewhere to call home. I'm not sure, if there's data that talks about, short-term housing needs like Airbnb, but I know for sure down here in Florida where I'm at, there's people that are staying in Airbnbs until their houses are done being built. There's probably going to be more of that, I guess, as more building has to get done to satisfy the demand, I would think. So there's all kinds of different things. And then, like I think Noel said, the financing part of it's important, but also look at, like, when I'm looking at a market that I coach my friends or my investor clients on, or myself for that matter, it's like I look at cash percentage also. I'm looking at markets that are somewhat agnostic to financing. So like if I can find a place like this part of Florida, for example, it's more than half of the actual buyer pool is going to be buying cash or heavy cash down payment. They're not relying upon financing because they're coming from other parts of the country that are more expensive to live. So I think, again, if we could localize, I try to localize my perspectives whenever I can to think about not just the macro, but the micro or even sub micro, like the local. That will probably help. I think anyone listening to this to think about how do they take this information and do something practical with it, you know?
And to give some governments, the kudos, they're allowing ADUs in some areas.
Yeah,
You made me think of that, Douglas. I think that that's a really smart move for both sides. We can get more people in a dense area. It sucks for traffic, but the government doesn't really have to pump more money in to get more tax dollars. So it can help the local government. And I don't know all the details, but out in California, they turned everything into multifamily, I believe, where you can turn your house into a duplex, triplex. I don't know the long-term effects of that, but I think that that's a good affordable housing, thing they're going after.
So if you ever want to look up AEI, American Enterprise Institute. They're based out of California. They publish a lot of studies on that medium density housing, and it's about zoning, right? Because most of our country is zoned for single family, and it restricts having any kind of true density. And so they're doing this in Colorado with the ADU. It's just kind of getting off the ground. In California, it was really huge. I know some guys who raised a lot of money around this on going in and splitting up parcels and making it another unit or turning them into a duplex. But that medium density, meaning like corners that you can have a little bit higher density, just creating a diverse housing, because the way that it's going in some places is that if it's all just single family, you're not allowing the people who work in that community to live in that community, and that makes everything more expensive and then starts pricing everybody out. And so it's really interesting. So the American Enterprise Institute has a ton of information about this that I find fascinating. And then low income tax credits and all that kind of stuff.
It's needed because I'm a nature guy. So selfishly, I don't want us just to build wide, because we're going to destroy the nature that I love to go to.
Yep.
I prefer to deal with some traffic and be pretty dense in certain areas. And then there's going to be people like me that don't want to live there all the time. We want to go out to nature. But if we continue just spreading like we are,
right,
we're going to cover the world with concrete.
Yep.
Yeah, I was born and raised in New Jersey. I lived there for 35 plus years of my life. So it's kind of ironic for me to say, but now I'm in Florida and there's so much land. It's beautiful, to Adrian's point. But yeah, we do need to get a little more densely populated in certain areas because there's a lot of land to build on. It just also then it's all connected though, because the whole the builders challenges like supply chain and just the economics of things and stuff like that. So even if we had the land and the density, then there's still the construction process too, the time it takes to do that. So it's a process for sure. It's quite complex, but it's doable. It's going to require a lot of people to put their heads together. They're going to come up with some solutions and change some policies for sure.
Yeah. Let's jump into the next one. Benzinga. Sunbelt cities lure people with warm weather, abundant jobs, and cheaper housing. They mentioned Sacramento, Vegas, Miami, Tampa, and Phoenix with high net inflow. And then jobs in tax-friendly states were also a driver. Cities where people are leaving: San Francisco, LA, New York, Washington, D.C., and Chicago.
Named all very highly regulated and highly taxed on all levels cities. I lived in Chicago for 20 years, and people want to live in a place that it's easy to live and do business. And, we talk about building and all those things. It's people are moving to the places where it's just easier to live, period. And the more regulation they put into a market, into a city, the less people are going to want to build there, the less people are going to want to live there. And again, it's like real estate investing. When things get tough, all kinds of shines a light on all those difficulties.
Yeah, we definitely. Go ahead, Adrian. No, it's all right, man.
I was going to say, I see a lot of investor friends around the country that when the city doesn't want to work with them anymore and they want to start regulating, that they try, and then they give up and they say, all right, we're selling, we're telling our friends to sell, and we're going to go and invest somewhere else. And those are really good people that they're in business to make money, but they're also there. They want to help their residents that live there. And I'm fearful, who are they selling to? Because the person that's just going to put up with all that probably doesn't care about rules and laws and the people that live there. So maybe I'm a little negative Nancy, but I'm concerned with what will happen in those markets for the people that need to rent.
Yeah.
Colorado's been getting a lot of stuff on the docket that's going to be very bad. Rent control, that got shot down, but it was getting voted on. We're all like, oh no. And we now didn't have it before, but now you have to have a rental license. That's in process already. So
it's very interesting, and we can go down a rabbit hole of why that's happening, which I don't think we want to go down right now. But
I can tell you firsthand. I'm not going to share the story because of the time today, but I can tell you probably multiple stories as an investor fixing and putting houses on the market for rent or selling them in certain parts of New Jersey, that I was one of those guys that said, I'm not going to do business in this town anymore because of the way that they operate and different things, not just the rent controls and stuff like that, but more just the policies and the governmental aspects of things, making it difficult to do business and the high taxes on top of all that. And I just like, to look at inflows. So I just comment for the group again, for the folks listening, like, look at where people are moving into, right? So if I'm looking at, like I think Noel said, look where it's easy to do business, but also look to see where people are migrating into and towns and cities that I see on this list, Jacksonville, Florida, Houston, Raleigh, Portland, and Tampa. Like, those are places that people are obviously moving to grow their family, to grow their livelihood, to do stuff. So I'd want to look at those. I'm thinking about where to start. Even if I'm not in those markets, I'd still want to look at them and say, how can I participate in the markets that are growing? So just some thoughts.
Yeah.
And I think as a community of investors, we need to help each other out. So these markets that are not ours, that we don't invest in, if we have friends there, we need to send the emails to their government people or whoever it is that we need to help them get the word out. Because if it starts passing in some areas, it's just going to spread, because they're just going to say, oh, look, it works in this city. And I think we just need to help each other out with this topic. And not just bashing either. I'm talking actually give real stories. I mean, Douglas, you just said you have something. Give real stories.
Yeah. We had, you're right, Adrian. So we actually reached out in that one example to a council person and try to get some influence with, and then a friend of mine knew the mayor of the town or the city. It's in Essex County, New Jersey. And it's like, but even still, unfortunately, hit deaf ears, as they say, but we still put the effort in. And then those other people, investor friends of mine that also invested in those markets, that literally just shifted away from it. They attended multiple, meetings, town halls, whatever you want to call it, to sort of almost protest or bring up a need for policy change to certain things. And it just, unfortunately, eventually it's going to change probably if they want to continue to have people moving into their city and town. But if not, at least, like your point, you play your part though. You can't just stay silent about it. You got to be willing to take that risk and bring it up. Yeah. Us as investors, like you said. Yeah.
I'll plug my friend, Jeff Watson. He's helping on a national level with this topic. So if you have any interest in helping with that, I would reach out to him, get on his emails, because he sends out stuff of how we can help on our small part to help them nationally and then within our small communities.
Yeah. He presented at a meeting down here in Sarasota not too long ago. So I know him sort of, not really like personally, but yeah, he's a good dude. Yeah.
Yeah, he is.
Making things happen.
Nice. Let's jump into the next one. Go banking rates is the source. Florida land buyers scammed for more than $100,000. I'll just read this quick synopsis. It says, searching county records for undeveloped lots, scammers target property and impersonate its legitimate owners and title companies before contacting real estate agents and independent buyers. They then attempt to sell off lots quickly through fraudulent wiring instructions so that closing funds can be moved to bank accounts controlled by the swindler. So that's what's going on. Anybody had any experience with that? Heard of anybody getting scammed, or have you done it to
title company? They used to do a lot of education, and he was talking, this is a few years ago, about the wire fraud problems. And they're essentially not looking at it when it's only a few $100,000. When I say they, the federal government, because they don't have time. There's so much of it going on.
Yeah.
So I just have a rule. I deal with one title company. If I have to deal with someone else, they still have to review all the documents. And their wire instructions have not changed, but I still call every single time to verify because it's 15 seconds for me to call.
Yeah.
I mean, it's worth the money. It's 15, 30
Totally.
seconds. Just don't
Yeah, I
get
happen to
sloppy
be.
and lazy.
That's right. I happen to be partners in a title insurance company that does business in New Jersey and Florida. And my business partner has been in the business about 30 years, but he's told me many stories about different types of wire fraud situations, deed fraud, all kinds of stuff. I saw firsthand somebody trying to quit claim deed of property and have somebody else impersonate somebody. It was just, they sent over this deed and said, we want to transact and finalize this deal, this and that. And I just and Ken's like, no, this is not legit. Here's why. I could see it, the signature or something. It just he looked at the title searches and stuff like that, matched it up. And then there was a situation where, confirming wiring instructions where there was an attorney, I think, that had his email hacked. And this was on a transaction that wasn't one of our actual deals, but it was a deal that was involved with our title insurance company. And that particular attorney's office was, asking for a wire, and it was not it wasn't the right account. It was a hacker that went into his account. That attorney's, I don't know the name of the guy, but he went in there and requested the wire. And then it looked like it was him sending the message, but it wasn't. And then the party that sent the wire was a layperson, didn't think to call and confirm, everything like that. What Adrian just said is exactly right. Just call them on the phone for 15, 20 seconds, just read the numbers off. It's not a big deal. Because that particular transaction, I think it was close to $300,000 that was lost. And I don't know, there's E&O insurance and stuff like that, but now you're actually talking about that's criminal activity. That's not even just that's major, right? But these people could be offshore. There are other countries, other parts of the world. It's just nuts. So definitely be very, very careful, 100%.
Yeah, I saw this when I was in Chicago all the time, but we recently, a previous company I was with, we had a similar thing where somebody hacked the site of a vendor that we were paying. And they changed, they sent an email from that vendor saying, hey, our wiring instructions have changed. Send it here. And, it was a couple $100,000. So I think if you're doing a real estate transaction, having a really, like Adrian said, title company, same people you work with that know your deal and have an attorney, you can't just kind of go by the seat of your pants. You need to protect usually your investors' interests, right? So you need to make sure that you're not just kind of flying loose, and it takes only a few minutes or seconds to verify and to make sure everything's good. And no surprise. It's been going on forever, and it'll continue to go on.
Yeah.
I'm hoping blockchain might be
Yes.
the solution. Help get this under wraps.
I think you're
We'll
right.
see.
Right.
All right, we got a special news alert. Billionaire real estate investor Sam Zell dies. We were just talking about Sam Zell last month. And here we go, we lost him. I really didn't know anything about him. Do you guys have any experience with him and know his backstory?
For sure. Chicago guy. He's a guy who lost everything a couple times and figured it all out. And that's what life's about, right? Got to take your ups and downs. But there it is, Adrian. 400 trailer parks or mobile home parks, equity lifestyle properties.
Wow. That's a shame.
Yeah, he's impressive guy, and I saw him speak a couple of times in Chicago back in the day. Just very interesting guy.
Yeah. Well, hey, I've got some bullet points from this article about him. I'll just go ahead and read through them quick. So he was born, I don't know how you even say this, Shmuel Zielonka, 1941, son of Jewish immigrants from Poland who came to the U.S. via Tokyo. While in school, he started managing real estate, and by his law school graduation in 1966, he and his partner were managing over 4,000 apartments and owned 100 to 200 units outright. After working as a lawyer for just 1 week post-graduation, Zell decided to switch to real estate, purchasing an apartment building in Toledo with the help of a senior partner's investment. Zell was the founder and chairman of Equity Group Investments and had interest in several public companies listed on the New York Stock Exchange. This company, Equity Office, was sold to Blackstone Group for $36 billion in 2006, marking the largest leveraged buyout in history at that time. This company, Equity Lifestyle Properties, owns more than 400 trailer parks or mobile home parks. Zell had diverse business interests, including ownership stakes in the Schwinn Bicycle Company, drugstore chain Revco, Broadway stores, energy company Santa Fe Energy Resources, and mattress company Sealy. Known as, quote, the grave dancer, unquote, for his investment in distressed assets, Zell was considered an opportunistic or vulture capitalist by critics. Zell was known for his adventurous personal life, including leading annual motorcycle rides with a group called Zell's Angels and leading Black Diamond ski outings for his staff. He passed away May 18 this year with an estimated net worth of $5.9 billion at the time of his death. He leaves his wife, Helen, 2 sisters, 3 children, and 9 grandchildren. R.I.P. Sam Zell. So, from 1941 to 1923. All right, let's jump into, we have a fun news item. The 17 worst value drinks to order at Starbucks. It was a long article. I don't know if you guys read through that. If you're a Starbucks drinker, it was on tastingtable.com. Worst value drink order, Starbucks. Just search for that. They were comparing things like buying a Frappuccino versus an iced latte. Like you can kind of get the same value if you just know how to order. And one of the takeaways was if you're customizing, it's more costly. If it's kind of built into a menu item, you're usually saving money doing that.
Well, I learned a hack at an airport so I'm a low carb guy, and there was a long line like there always is at Starbucks at the airport. And I don't remember what I was ordering back then, but the barista said, well, why don't I just give you a hot coffee and I'll steam some heavy whipping cream, and it's essentially the same thing. So it cost me less money, and I skipped the line of the 10 people waiting on their drinks. So now that's what I order every time. And sometimes they try to put it in whatever the fancy real name on the board is, but that's what I order, and it saves me time and money.
Yeah.
I typically do a hot chai tea with tea bags and add heavy cream to it, and because I'm a low carb guy as well. I don't know, some of these are crazy drinks. When I lived in Chicago, I was buying Starbucks every single day, and now I'm in the mountains. We rarely go.
Yeah, I go for the vanilla sweet cream nitro cold brew. So that's my favorite drink. I used to do a lot of frappuccinos, but yeah, all these different words and terminologies, like another language, and it is quite expensive. But yeah, if you go, I mean, I didn't realize how inexpensive the coffee was, relatively speaking. I mean, it's a couple bucks for a cup of, a decent sized cup of coffee. So if you go for the fancier drinks, it's like $5, $6, $10, whatever. But if you get just a regular cup of coffee or a tea, it's probably not too bad. So it's an interesting marketing play, I feel like. And it's also it is quality, I would say. I mean, relative, we make coffee at home. We do a lot of lattes and stuff like that, and different cappuccinos and things like that. But it's pretty decent. But it's just a matter of it's also very, I mean, it's gotten to be at least more systematized. And I think that I always wonder how many different combinations the barista has to memorize or remember, like all the different nuances and things. And it's just like a whole nother, like I said, a whole nother language. So it's just kind of impressive that they know all the different features of the different types of drinks. And you ask a question or whatever, they usually have a pretty good answer, like what to do to make it similar to something else, or it's pretty impressive. So, but it is expensive though, relatively speaking. Yeah.
It's like a cult.
Yeah. Right.
I mean, this article basically tells you not to buy anything at Starbucks.
Yeah.
We're talking about expensive. I actually
Most
usually
people
pay a little
don't
bit more
care
than
about the
Starbucks.
extra 50 cents to have exactly what they want.
I mean, but if you go to like get a drink at a restaurant or a bar and you get like an old fashioned, it might be $15, but it's really like not even $1 worth of alcohol probably or something
Right.
like that. So it's same concept. I think it's convenience and placement and marketing and all kinds of stuff.
The environment that we're in. So I travel around the country a lot now, and I make my office out of coffee shops. I prefer to go a little one in a downtown area versus a Starbucks, but I will go to Starbucks when it's more convenient, and I'll work there for 3 or 4 hours. It'll cost me whatever a coffee costs for an office space.
I've gone on whole trips and lived off Starbucks egg bites before.
I mean, it shows how well they do with that marketing because they now sell those in the supermarkets in the frozen section. Starbucks brand egg bites, and there's many people have copied because they're wonderful.
Yeah.
Nice.
Talk about bang for your buck.
Well, guys, that's our show for this month. I'd like to thank our sponsors, Jason Palliser's 2-day investment blueprint and REI content packs. Our guests have been Adrian Smude, Noel Christopher, and Douglas J. Beck. Hold on. Let's see. I lost my spot here. Sorry about that. In that same order, why don't you guys let people know how they can connect with you, and don't forget to stay on after we stop streaming so it saves your individual recordings. And also thanks to our producer Antonio Holman with United States Real Estate Investor. Follow and subscribe to This Month in Real Estate Investing on YouTube at youtube.com/@United States REI or your favorite podcast app. So if you guys want to jump in real quick and let us know how we can get a hold of you.
The easiest way to find all my connections is AdrianS360.com. That's going to have links to my book, my social medias, my websites, anything and everything I have is just right there. You can follow me, send me a message. I wouldn't call me because I don't answer my phone, but I do pretty well with messages. And if I can help you out in any way, let me know. I appreciate you having me here. This has been a lot of fun.
Awesome.
Yeah, the best way to get a hold of me is honestly through LinkedIn. Or, you can go to evernest.co if you're interested in property management. But if you're interested in real estate market, property management, real estate investing, any of those things, you can just find me on LinkedIn. I put a lot of content on LinkedIn as well. You'll see me driving in my car a lot on video. And I appreciate you guys, and great to get to know you. And we should all reach out and see if we can do some business together somehow.
For sure.
Awesome. Yeah, likewise, everything these guys said. So the best way to reach me, you can go to douglasjbeck.com and learn a little bit more about what we do, what I do, what my companies do. Each of the individual businesses is kind of there. You can click on it. If you're interested in getting any sort of support, or if I can add value to what you're working on, you can check out the Growth Collective. And there's a little image of the Growth Collective on that site. There might be a way to schedule some time, but if you can't find that, you could also send me a DM on Facebook. You just go to m.me/DouglasJBeck, or just find me on Facebook. I'm heavily on Facebook with a lot of what we do. Douglas J. Beck is my name on Facebook, but you can also do m.me/DouglasJBeck, and then it's going to take you to a DM conversation directly to me. Again, thank you to the hosts and all the great conversation today. Learned a lot about you guys as well. Adrian and Noel as well. So thank you guys.
Thank you.
Fantastic. Thanks again, guys. And remember, when one door closes, another door opens to financial freedom. See you next month.